As investors, I feel like we always talk about buying. Buy here. Oh, this is cheap. You should buy it. Oh, this is too expensive. I wouldn't buy it right now. But we don't talk too much about selling unless it comes into two forms which aren't necessarily ideal. The first is panic selling. That should be kind of obvious. You panic, oh, it dropped 12% today. This DeepSeek thing, I'm going to sell. Now, of course, there's some situations when that is okay, when your fear comes to pass and you do need to sell. And then there's another situation where a stock hits a certain price target we have and then we sell. That's more for trading, but even it could happen as investing. So it's like, oh, I feel like AMD is valued at 150 right now and the share price is 116. Then, okay, they blow out earnings 40%, beat EPS guide well, then they're at 150, but that's not even really doing what you want it to because you think it's valued at 150 where it is right now, but they just blew out earnings, so the PE is still the same levels. So then that can mix things up. So today I'm going to dive into some ways of when you should sell. When you should sell, but not just to sell spontaneous, but a planned out exit strategy, or when I feel like things are getting a little too expensive for me. So we're going to dive into that in this video. Now, your first battle when it comes to buying and selling, but specifically selling in this example, is actually yourself. The mental side of things is so important because you have to be grounded. Because when the stock is up 20% and you expect it to be down and you're going to buy more, crap, I missed my chance to buy. Or inversely, you have a stock, it's like, oh, I believe in this thing. And then it tanks 15% on earnings. You're just like, what? Am I stupid? Calm down. Take a deep breath. It's all right. Because oftentimes the ups and the downs have nothing to actually do with what the business is doing. They don't. For example, I bought ASML fairly recently. I didn't own a whole bunch of it at all, really, if any. And I bought it right before one of the most recent earnings, not the most recent, but back in November-ish. And literally 3 days later, I bought it, I think on a Monday. They released earnings early on a Thursday or a Wednesday, and it fell like 10%. It's easy to panic when that thing's happen, but if you actually look at it, the only reason it fell is because people expected guidance to be a little bit higher, even though they guided for like a 7 to 12% growth in that year, something like that, 5 to 10 maybe, which is a little bit low, but that's fine. So how do we have a clear head about these things and make good decisions and not let FOMO or something drive us completely? Is first we make a plan. Okay, when this stock hits X amount, I'm going to sell whatever it may be. For me personally, I like to go off of PE, and it helped me well in this scenario, specifically with AMD. Now, I'm not going to sit here and say I'm an absolute genius, but I did sell AMD basically near all-time highs in that 212-ish range, because I personally thought it was getting a bit expensive as a long-term believer in AMD. However, I did not sell all my shares. I would have rather had them run back to 100-ish than if I was to sell completely out of a company I truly believed in. So I was able to buy some more down here, but still long-term, I believe in the company, and I did end up selling, and it did clearly profit me. Now, of course, if I sold all of it, I would have made more money and bought back down here, but you can't always time something like that. That's how I feel, but personally, this is on selling, so I'm going to focus on that specifically. So personally for me, when stocks move outside of earnings, so off of hype, and that's what a lot of AMD was doing here, is it was moving off of hype. That's when I wanted to sell it. Sell some of it, right? So something like TSM or NVIDIA, they're blowing out earnings. They're going up crazy. And yeah, I'm not saying they don't have high-ish PE. NVIDIA's PE is, 54? Something like TSM's like 30, which isn't as high. But companies that are successful are going to have higher PE margins. But once it starts moving completely off of just hype and not off of earnings, that's when I look to sell. So we've covered a couple important things, but mainly just have a plan, stick to it, execute it, and if it goes wrong, factor that into the next one. I like to hold companies that I feel long-term truly believe in versus one you think is just a little cheap right now and it goes up. If you think something's like, oh, this is crazy cheap, you buy it, it's PE corrects, go ahead, sell that, whatever. But company that you truly believe in, I really like AMD. I would be a lot more upset if AMD, I sold most of it and it continued to run up than if it went back down and corrected and I didn't do as well. That's just my personal feelings on it. And a lot of stocks, like I said, is the mental side of things. But mainly just have a plan, execute it, and then correct it, adjust it. I did this wrong. I did this right. I feel this. I feel that. And I wish I could tell you there's some perfect opportunity. Oh, yeah, I know when AMD's perfectly topping out and sell it. Even if I didn't, maybe. And you're going to get lucky and you're going to get unlucky sometimes. That's just how these things work. I did happen to sell some near 210. but I didn't sell most of it. And I'm buying down back here, and now it's 110. If I perfectly could see, I'm going to sell all my shares at 220, 225, buy back in perfectly at lows, whatever at lows bottoms out at 190, even right here, whatever it may be. I'm not that smart. Maybe there's people that can help you with that. I doubt that, because if they really could see the future, they wouldn't be telling you. They'd just be doing it themselves and making an infinite amount of money. I wish there was a get rich quick scheme, and maybe there is, but I'm not here to sell that to you. I'm telling you, have a plan, execute that plan, learn from that plan, but also primarily go off of PE. Be more likely to sell off of hype than actual earnings, because something like Nvidia that's gone up crazy amounts, primarily goes off of they were growing their revenue and profit insane amounts. So that's not just all hype, although there is hype behind it and it does have a higher PE. But I like to let my companies that are successful, companies I truly believe in, run. And then, if it just, hey, I think this is cheap, runs up, sell it, completely fine with that. I don't have any secret formula for you, but that's what I would stick to personally. Anyways, I appreciate all of you for watching. If you enjoyed, I appreciate if you like and subscribe, and I'll catch you next time.